All right, let's get started. Assalamu alaikum, everyone. Good afternoon, and thank you for joining us today. We're excited to host this educational webinar as part of our ongoing effort to highlight new and emerging opportunities in Islamic finance. Today, we're joined by Tom Polson, General Manager at Polson Real Assets, and Iman Shibli, CFO at Polson Real Assets and founder of Tax. Throughout the presentation, you're welcome to submit your questions directly via the Zoom Q&A box. We'll reserve time at the end to address as many of them as we can. Quick disclaimer before we begin. This session is for informational purposes only and should not be considered investment advice. Please do your own due diligence before making any financial decisions. With that being said, I'll hand it over to Tom to get us started.
Very good. Assalamu alaikum. Thank you for hosting us today, Saad, and the rest of Zoya team. We look forward to just giving you an overview of our business, our program, what our members are like, and what our future goals are. So we'll just do a short little bio. Saad mentioned my name is Tom Polson. I've been involved in Islamic finance since 2008. I have 2 graduate degrees in the subject. I worked abroad for several years in a couple different countries. I've launched products both individually. I did an Islamic ETF on the New York Stock Exchange that went up live in 2014, and that ran for about 2 years. I've also helped organizations as a Sharia coordinator, creating funds, creating offerings, restructuring their programs to effectively raise capital from investors from the GCC. And I still do that today for a couple organizations. And I've also been involved in a lot of back and forth US to GCC businesses, either people looking to take their business to the GCC or a GCC business that's looking to come to the US. And that can involve everything from defining the operating model, the capital, IP, and patent licensing rights between them. And now we'll hand it off to Iman. She can talk about her background a bit.
Yes, of course. Well, thank you everybody for joining. Thank you, Zoya, for hosting this, and everybody in the Zoya team, as Tom mentioned. Assalamu alaikum wa rahmatullah. It's just truly an honor to be here with you all today, joining from across the country, and I see across the globe as well, mashallah, to talk about something more than just money, building wealth with integrity and purpose. And by way of introduction, I want to share why this topic means so much to me. I come from a Lebanese family. I grew up in Dearborn, Michigan, and I now live in Chicago. And over the years, I've seen how Islamic finance, or even the lack thereof it in our communities, can affect not just our homes, but also our businesses, our communities, and the economy. And when our financial choices don't match our values, or we don't have access to those that do match our values, it shows up in many ways. And many of you are here today through Zoya. So alhamdulillah, you're most likely already ahead of the curve and thoughtful about aligning your money with your faith, and that's wonderful. And whether you're just starting out or already experienced, we share a common belief and mindset that our money should reflect our morals, not just the market, and our wealth should carry our values, not just our value. I'm a CPA and certified Islamic financial executive, and I've spent 20 years in business and tax strategy, starting with corporations and in corporate, where I had success on a paper, but something always felt missing. And I didn't realize it back then, that what I was advising on wasn't fully aligned with Islamic principles in our faith. And I thought that there weren't many options available in the US. But once I learned about Islamic finance and about the resources, I realized that, subhanAllah, there's more options than we know of, but the access to it needs awareness. And that opened my eyes to a bigger issue, that our communities need more than just the business services. And we need education, awareness like this, and guidance about how to build wealth that's halal, ethical, and lasting for multi-generation. And that's why I continued through my firm, TACS, offering fractional CFO services to mission-driven startups like these here today and growing companies, and for non-for-profits as well. One of the companies that I work with is as a fractional CFO is Innate. It's a VC firm that invested in both Zoya and PRA here today, where we support companies with value-aligned financial leadership. And through this work, alhamdulillah, I've seen clearly that our communities need more than just tax help. We need holistic, faith-centered support and real alternatives to conventional finance. And before I hand it off to Tom, just a quick disclaimer of what Saad was saying, that this is for educational purposes only, not investment advice, and all investments carry risk, even the halal ones that we're going to be talking about today. So do your homework, never invest more than you can afford to lose, but do nothing at all. And we call it the Muslim penalty, or the cost of being Muslim, for the time value of money lost. And so while the risk is real, firms like PRA help manage it through diversification. And so we'll talk a little bit about that, and transparency through value-aligned structures. And with that balance in mind between faith and finance, and opportunity and responsibility, Bismillah, over to Tom for the heart of today's topic.
Very good, Aman. That was fantastic. I apologize for not giving a bigger intro, but she definitely took care of it for all of us, which we're very grateful for. So PRA is Polson Real Assets, and so our core business is real assets. Now, today we're just going to kind of cover 3 core topics over our 30 to 40 minutes on these slides about what real assets are, where PRA comes from, and then how we manage to select those assets across the world. And I know real assets might be a bit of a misnomer, where it's not real estate, it's not one specific thing. And this is why I think it's a super interesting asset for investors around the world, especially Muslim investors, because it deals so much with hard assets that we deal with on a daily basis. And so we tried to think about, okay, how can we best present this in a unique way? So, and so what we really like to focus on, so real assets, you can think of it, all the things that make something work, that move society along, right? So we have real estate, we have infrastructure, commodities, and then there's the technologies and support businesses that can help all those things work in tandem, right? Commodities could be gold, right? We could use gold as an investment collector asset, but gold can also go into the manufacturing of components, cars, so on. And real estate, yes, we have buildings, but then there's all the internal components of a building. So as a diversified investor, you could say, well, I don't want to invest in a property. Maybe I'm interested in investing in a plumbing or an HVAC business, right? We have so many baby boomers now retiring, trying to sell their businesses that have been around a very long time. And these are the kind of businesses that are out there for both investors and entrepreneurs to become part of. So we felt, we didn't want to focus on one single asset class, but rather the components that make for a strong society and program across the board. So we thought about, okay, how can we present this in a very tangible way? And so, as I said before, this covers services, businesses, technologies, and the assets. But if we think about, something we see every day at PRA, many of our members work in the healthcare field, doctors, nurses, scientists. So we said, okay, let's just say use a hospital, for example, right? So make a hospital run 365 days a year. It needs the real estate. It needs the HVAC systems, it needs the elevators, it needs the sprinkler systems, and all the people that can service those assets internally. Then we think about the infrastructure that makes a building work, right? You've got the data systems, you have the water, the power, the connectivity to the outside world, internet. So this is why you can also hear sometimes digital infrastructure, right? Those are telephone lines, those are cell phone towers, so on. And then the commodities, we might not think that a hospital has commodities, but they actually do. It's the cleaning materials, it's the medical gases that go into things like anesthesia. It's the components that a hospital might use if they manufacture their own special surgical equipment, right? And then we can also think of the outside companies that provide the hospital with MRI machines, all those kind of things. Everyone can fit into these components of a real assets function inside a hospital. And then obviously you have the services and technical attached to that. Everything from how do you keep a hospital running year round, like the integration systems of the software to make sure each department can easily talk to it, patient records, keeping those records safe from the outside, keeping the time going. Connectivity, some of us may know that hospitals may not do the screening of x-rays right there. They might be sent up into the cloud for another specialist to review over time, to get best of breed analysis from maybe AI or what have you, or specialists in other cities or countries. So I hope that's like a good overview, and feel free to use the chat and we can address maybe specifics towards the end. But I just want to give one example, and we can always think of other examples you see every day that might require dozens of components to work. And then think as an investor, which one of those components might I want to be aligned with if you're in that capacity to do so. So now let's move on to PRA, and we'll admit when we first started Polson Real Assets, we probably didn't do the best job of vocalizing what our core strategy was. And so we did have some members that joined that thought we were a real estate company. We are not a real estate company. We are not a project developer. We're not going to go out and buy a building ourselves and then deal with property managers and being a landlord and tenants. And you can also think of that across the board. We're not going to be building, a factory. We're not going to be partnering with someone to do a very specific project. We're more the financier, the passive investor. And the other thing we're not is a promoter of one-off deals. A lot of us have seen investment platforms we can join, even on the real estate side where we join, and it gives us 20 different properties to invest in, right? We don't do that. We're not partnering with a developer or a project manager to try to sell their deal to our members. What we are is a collective ownership pool. So when you put your capital into PRA, you get a diversified owning of the entire business and all the assets based upon your percentage of ownership for your capital contribution. We try to take a global approach, much more so in the last 6 months, as we've seen things like tariffs, political instability, the weakening of the dollar. So we've made investments abroad, which we're really happy to have done, all in Sharia compliant assets, either say stocks or REITs that fit into the Zoya framework, or the approach that other Sharia scholars we know in our network. For instance, certain countries have a national Sharia board. So if we go to their listings on their stock exchanges that might not be in Zoya, we know that they fit our criteria as well. And so this allows us to be kind of a passive allocator to deploy capital on the long term across a range of assets. And as said before, everything we put our capital into is Sharia compliant public and private assets. Now there's some assets out there, for instance, if it's a real estate, buying a fractional shares in a piece of real estate, well, that property does not have a fatwa attached to it, obviously, but we can say, okay, it is a residential property, so we don't have to worry about the rent roll of having non-compliant businesses in there. We know that property doesn't have a mortgage attached to it, so we don't have to worry about being exposed to any riba. And also, sometimes in real estate, you might have a guaranteed buyback where that buyback comes with a built-in price increase, right? We don't do that because that would signify, riba guaranteed profit above anything. So I probably might have covered some of this a little early because we're going to touch on it as we go along, but I hope it's a good overview. Aman, do you have anything we could expand upon?
I put it in the chat, but just that, so to summarize, it's like vetted assets. So we use vetted investments, either through a Sharia board, through apps like Zoya, or through your last point, in terms of we already know that those assets are Sharia compliant.
Yeah, very true. Great. Thank you so much. So now we're into the good part. Everyone here on the call most likely comes from a unique demographic background, different ages, education, sectors. So we try to represent that in all our members. Our members are nationwide. We have folks on the East Coast, West Coast, Texas, Midwest, and so on. Most are, I would say, in their 20s to 50s. We have a few members, fresh out of university that are thinking about long-term investing, both on the personal side and their retirement accounts. Most, I would say, work in healthcare, technology, engineering. We obviously have nurses. We have people that have more everyday jobs, but I would say on the whole, quite professionals in our group, very experts in their field. We even have CEOs of some tech startups out there, which is really interesting to get their view because they deal with the same things that we deal with of capital planning, finance, promotion, marketing, all those things. So it's great to get their insights. And it's really important to point out that our members, they're not passive, right? They can be involved as much as they can. For instance, Aman came in as a member, and then over time, she as a member that did our taxes, and then she evolved to be our CEO. We have other members that, we are extremely passive, and that's their option. We would like them to be involved more, but some don't. Others will send us emails every week, have you thought about this investment? Do you want to hold a vote on, a certain strategy? Do you need any help with due diligence on a possible project or a possible investment? So it's a great collaborative effort, and we're really grateful for it. So how do our members, hold their equity? Some come in individually. Others have LLCs or businesses they can join with. Trusts, we have a couple family trusts, different kinds, both revocable and non-revocable trusts. And then we also have the ability to onboard people through self-directed IRAs. Now, this is great for, say, solo entrepreneurs, startup founders, and that can be done in a number of ways. And we're also we've also had discussions with some endowments that are looking how to invest their money. So in a perfect world, we could have a mix of all different kinds of investors in the US. And as Aman said, Innate Capital is a venture capital, is a VC fund. So we have that option too. Our members either can do, a lump sum annual or recurring monthly contributions. I would say the lump sum annual types are the more passive, they're very busy types. They're not going to be involved on a regular basis. But I would say the monthly folks are the ones we hear more from because, every time they put in capital, we have to think about, where do we put it right then rather than a larger investment at once. Aman, anything else? What else can we think about?
No, I think you really summarized it all and included everything. And I think it goes down to mindset, right? So it's investing our money in Sharia compliant ways and having that opportunity to be able to do it in consistent amounts every month too. I mean, yeah, we have the annual contribution, but whether it's through PRA or anywhere where you can set it automatically, but having that consistency where Allah says subhanahu wa ta'ala that the best of deeds are the ones that are consistent. And so when people come and they join and they do those monthly recurring contributions, it's getting into that habit of being comfortable, starting to invest, starting somewhere. And B, it's like, then you just have it, it's the time value of money. You start somewhere, you start consistent and recurring monthly contributions. Over to you, Tom.
Yeah, very good. And I guess the point we'd add about Polson Real Assets, like where the name comes from the original Polson company, which operated in Seattle for over 100 years. And so this notion of longevity, I think, gives some of our members some clarity. We're not here to do a quick, 5-year deal and then close. We're really interested in operating this for several years, several decades even. All right, so now we just want to give people, just a general performance snapshot. We're a private organization. So we don't want to, we can't give you specific numbers on our size or what we exactly do. But, we've had a great start to the year. Year to date, capital contributions are up over 43%. And then since we've started, we've pushed out about 5% of total assets as distributions. Those generally go out quarterly. Sometimes we do a year-end bonus distribution. And this is since we started in 2012. And then the current internal IRR, internal rate of return, is around 13%. Now, IRR can be thought of as the total return on your average return yearly, and that includes, the contributions, the distributions, and the growth of the internal size of the company. Typically, if you look at, say, real estate projects where they're building it from scratch, you might see an IRR of, 20%. But we're not a real estate company. We kind of take the view we're going to try to benchmark ourselves against, say, the price of gold or Berkshire Hathaway or maybe a diversified Islamic mutual fund. just to give us some framework in terms of dividends versus growth. Now, obviously, this number can change. Imagine members decide, hey, let's not take a dividend this year. Let's reinvest that capital. Then our performance figures will be different. This simple bar chart, we just wanted to show, total contributions by month, and the value of the company growth year to date. And so as we can have some months we were down. April, we all know that's when the threat of tariffs came in, and then the recovery of political instability and so on. So I think we're on a good track for the end of the year. This is now our platform, TribeVest. It takes some getting used to. We've all dealt with some growing pains of working with a fintech platform like this. Iman can probably definitely share, how we use it, some of the pitfalls, some of the things we look out for, if you don't mind.
Yes, sure. So, TribeVest is the platform where we manage all our contributions. You'll have access to the dashboard to really track the total fund and your contributions to date. I think what Tom is referring to in terms of some of the challenges, and this comes to us being an Islamic co-op model where we have musharaka, like we use Islamic finance structures like musharaka and mudaraba and whatnot, and being able to use platforms out there that already exist, in conventional finance, and to have them tweak what we're looking for when it comes to risk. It's shared risk, right? But then also profit sharing. We have to do that on the back end. But we take care of all of that for you guys. It's part of administrating PRA. But it's a platform for you to use to start contributing to. You get it set up, and we have it integrated, or we have a manual integration that we've done to where you can now start setting up recurring contributions, and you would come to your dashboard and it's a snapshot of your contributions today.
Very good one. Much appreciated. Yeah, so as Iman said, the platform does all kinds of things. One thing it's really quite good at is member onboarding. So TribeVest, you can think of TribeVest as kind of like a brokerage platform that's going to do the KYC. It's going to collect your information. It's going to link your bank account to the platform. And then you would join PRA as if you're deciding to purchase a stock, for instance, right? And then that is your holdings inside of TribeVest. And on there you have your dashboard. You have you can always track your ownership. You can track distributions, and the voting system is very important because we try to maintain the Shura model where everyone has a say. This means that members can put motions themselves or vote on things we might do over time that management or the admin might propose. And so I see we have 6 active motions. People need to vote on those for it to go through, and once it goes through, then we integrate it. But TribeVest is a platform that isn't perfect, so we're always open in the future as we grow and scale to either potentially build our own platform or transition to another one which might be able to help with scaling. Imagine we have so many members that we can't handle on a manual basis. We need more tech integration to do that. All right, so now I think here's what kind of sets us apart. So a lot of us probably own stocks individually. We have Islamic ETFs or Islamic mutual funds out there, right? But those products like that tend to have very strict mandates, right? It's going to have stocks for a specific sector or specific country, and it's unlikely that they're going to change their strategy to produce all kinds of diversification. So we really like to see ourselves as, an access provider to Islamic and halal managers out there to try to give a kind of best of breed to build allocation. So we use interactive brokers for our stocks and REITs. Lofty is a platform that allows us to invest in fractional shares in mainly residential properties. We are a quite big Bitcoin investor. We really like it as a digital asset, digital commodity, and integrated component of the fintech world. Godwin Capital is a real estate developer in the UK. We invest in their Wakala financing notes, so our capital is used to help build their apartment buildings. And then recently we've joined Curate Capital. I'm sure many of us have seen Ibrahim's videos from Islamic Finance Guru. This can be a very difficult platform to join to be an investor for an American, a lot of due diligence. So we've kind of done that for our members. And they have property, private equity, venture capital. The big thing we're really working towards more global diversification, more opportunities. So we're working with Nama Wealth. It's a manager in California. And we're working with them and their counterparts to set up a Saudi investment account. So we can tap all the momentum of the 2030 Vision Project. And then recently Invest Wholesome. Some of us might know about this or not. It's a manager out of Australia. And they invest globally in business financing. So they deploy capital directly themselves in the US, Europe, but then they also deploy capital through other platforms, specifically small business, Sharia compliant financing, with some pretty well-known names. So I wouldn't say we're a fund of funds, but we're a diversifier. And Iman, anything?
No, I think you covered it all. I mean, to summarize, it's really access to alternative investments that are Sharia compliant that otherwise would only be available to large institutions. So we're bringing that home to our communities and allowing them to be part of that network through PRA and invest in them, and diversifying it along the way. And as we speak about diversification, Tom, can you go to the next slide? And, as we had discussed about risk management earlier, diversification is just a way to manage that risk, and that's what PRA does. And as you can see in the pie chart, PRA has included a wide variety of investment allocations. And that, of course, change over time based on contributions, opportunities that are available, more options that we can invest in because we have a larger pool of contributions and market forces, of course. And Tom, can you walk us through the planned alterations and your thinking behind it as the model continues to change?
Yeah, very much so. I think now that our members are getting more into a really long-term focus, we're very interested in putting more capital in longer private holdings, for instance, like venture capital, private equity, real estate funds, which might have lockup periods of 5 to 10 years. So our members know this is a long-term growth flow, but also, we want to generate larger returns. So we're probably going to shift some of our capital out of Mudaraba deposits, which might produce 3 to 5% a year, into more locked in cash flows through Wakala notes. I said, but we're a big fan of Bitcoin. Lots of Sharia scholars have deemed it a Sharia principled asset, kind of like gold. The model is locked in, and gold can't go in and out of compliance. It's just set. So we really like it. And also we're thinking more in terms of this is going to be our treasury component. Fine, we'll hold it, we'll let it grow, but it'll always be that source of liquidity we can exit out of if we need to make, member distributions or investments into new assets. And so really going forward, we're going to really take the approach of more private assets because everyone can buy stocks, everyone can buy ETFs out there. And we want to ensure that there's more longer, diversified, defensive approach, especially when we think about the US dollar and other currencies out there that devalue over time. And I know we have some questions in the chat coming up, so we'll try to address those towards the end. Very technical, very good questions around zakat, around purification that we already helped some of our members with. So really, who is PR for? It's for folks that want a diversified approach. As we said, if you were to try to assemble this plethora of investments yourself, could be very complex. Or if you have an investment advisor, tasking them with building me a globally diversified liquid, illiquid portfolio, the unfortunate fact is they might come back and say, your account needs to be a certain level before you can access these things. So we try to be that access point to give people a diversified approach. We don't want your life savings. This is not what we're here for. We're here for the continued slow investment over time to grow your wealth and get regular distributions from these assets. And also, we're still looking for unique ways to enter, new communities, new sectors, new kinds of members. It's great to have, high net worth, the doctors, engineers, but we're really open to anyone that's just curious about this long-term approach. Because we do really are, purpose-driven, and, we want to see our values aligned. And, a question in the chat, a lot around Sharia compliance, about purification. These are all super important things. And so I think as an organization, as we grow, we do all of these things internally because our admin team have worked in Islamic finance a long way. So PRA on its own does not have a Sharia board. But in the event we reach a certain critical mass or dollar figure, this could be a thing for members to vote on. I have very close relationships with scholars, but the one thing to consider about Sharia scholars that are more conservative, which I would prefer to go with, is it could limit the capital that goes out. For instance, if like before we talked about investing in real estate that is halal but doesn't have a Sharia board attached to it, some Sharia boards, especially if you pull them from the Middle East, might say you can only deploy capital in something that has a Sharia board. Now that could mean limiting our ability to go into startups or individual businesses. So as much as I've been involved with Sharia scholars and Sharia coordination and developing products, there are some things in America which can make it quite difficult to be 100% aligned that way. And yeah, thanks for attending. We really appreciate your time. Saad, I'm sure we'll hand it back over to Saad, and Aman can do some final points if she'd like.
Oh, thank you. Thank you again, Zoya, for hosting this webinar. And I'd love to save time for the very thoughtful questions. And then we can maybe add more to it if we have time.
Great.
Thank you, Tom and Iman, for the wonderful presentation. We have a bunch of questions that have come in. I believe you should be able to see all of them. So we'll just go one by one. If you want to just go ahead and handle that, Iman. I think you can just click the answer live button as you go answering them one by one.
Okay, and we have a chat as well. So I think all the questions are just in the Q&A section.
Yeah,
okay.
if anyone submitted a question through the chat, please resubmit it through the Q&A box, and then we'll answer it there.
Sounds good. Okay, the first question is from Saleh. What is PRA's methodology for screening assets for Sharia compliance? I believe that was addressed later in the presentation, where we use vetted investments. And so that helps keep the actual cost down because we don't have to have a Sharia board within PRA right now where it's at. And so the assets and capital can be used to invest in the investments. And so for now, everything is vetted through apps that use Sharia compliant or are Sharia compliant.
Just to add to that, PRA does use Zoya for their public equities portfolio. And so that screening is done through our platform. And then, as Iman said, for other their other holdings, they use other providers.
Mm-hmm.
And we do take a Sharia risk approach where if a stock, this is one of the great tools of Zoya, it gives us a notification if a stock might be going out of compliance. And in that case, we take the standard IOFI framework of we have the ability to hold that stock for up to 2 quarters before we exit. And this is because perhaps that stock is in negative position, and we want to wait till it comes back up to par value for exiting, or there's always the chance that stock could come back into compliance. So we do, whenever that happens, there have been a few instances where that's happened with some stocks. And so we'll quarantine that. We won't put any more money in it. Any distributions that come out during that period, we'll give to charity and so on.
Awesome. And Tom, and on that point, give to charity and whatnot leads us to the second question. If you can continue in terms of how do we purify the investments for zakat purposes?
Internally, we follow the same approach as most mutual funds and ETFs. So we don't do the purification internally at the moment. Our members may vote to do that in the future. We do have a conventional bank account tied to TribeVest. So that does give out a small amount of interest. So that interest we give to charity right away. But I will say the majority of our cash we do keep in Stern Salam in their accounts. But sometimes we have some money in the TribeVest account for distributions because they have an automated distribution function to pay to the members. But the purification thing, we don't purify internally. Because we have Muslim and non-Muslim members. We're open to everyone. So for us to take a purification stance and give that away would penalize people that maybe already give more charity than they should, or people that don't give charity. This is just a fact of Sharia compliant investing. But what we try to do is come up with at the end of the year, we will give out a number based upon your ownership, because each person's ownership is divided by member percentages, not shares. And that percentage can change over time. So if you own 5% of the company and we have deemed that, 3% of the dividends maybe came from non-compliant sources, because we all know public stocks have non-compliant income, we would say, okay, you own 5% of the company. Here's the total dividends for the year. And boom, your calculation number for you to pay that yourselves. I hope that makes sense and everyone is on board with that.
Yeah, thanks, Tom, for answering that. And you had mentioned Stearns Bank. So for those that are not familiar and are in the US, just a little tidbit on that. They are a conventional bank that opened up a Sharia compliant arm last year in March of 2024. And so their balance sheet is completely separate, and it's managed by a Sharia board. And so with that, all our working capital is there in the savings account to earn interest, profit sharing interest. So it's not riba, it's profit share on those dollars. And so for the dollars to go in and out, that's where that conventional bank within TribeVest is used. We don't purposely hold money in there. And like Tom said, that month or that quarter, it's paid out, and we're talking very minimal, like it was like $6 one quarter. So it's not significant, but it is definitely managed. So thank you, Tom, for answering that question. If you can continue with the liquidity of the investments, is there a minimum term? We know PRA is more of a wealth generating strategy, a long term, but if you can further clarify that and talk about the long-term strategy in terms of liquidity.
Yeah, I assume this goes to liquidity in the event members want to exit or just cash on hand. This is why we aim to hold, 40 to 50% of assets in liquidity, liquid assets that we could exit from. We never want to hold a lot of cash on the balance sheet. But I would say on the whole, if we buy a stock, we're most likely going to hold that unless it goes out of compliance or it's no longer performing for the long term. Certain foreign stocks we are not going to sell. Like we have a REIT portfolio in Malaysia, and we wouldn't want to have to exit out of those just because they come with higher transaction costs. So we try to manage long-term holdings versus transaction costs to try to minimize what we have to do. But on the liquidity side, we have a general rule where if a member joins and they need to leave for specific purposes, we've had a couple of people request that. We have the option for people to exit over time. We wouldn't do a full payout of your account in one day. It would possibly be over the course of 4 quarters. We haven't had anyone say, we're done, we want to leave, but there have been some where I'd like to get a little bit of cash, redeem a little bit of my principal. So that is always an option, but not for until you've been with us a year.
Yes, thank you, Tom, for that. And in terms of cash too, receiving cash, one of the value props of PRA is that you get an alternative to fixed income. So it's dividends, monthly or quarterly, in addition to the capital appreciation. And so we have a question in the chat from Brother Azim, and our distributions are 5% annually. Yes, but where they're distributed throughout the year, and we reconcile it at year end for a bonus payout. And so hopefully that answers that question there. And we call it a dividend payout, whatnot, but it is essentially profit from the co-op. And so members do get a PRA because you're a partner in this co-op. So you invest, your capital goes in, you have your profit share allocation, and you get a K1 at the end of the year. And your distributions are recorded there too, but also the profit in the company, which then you would report on your tax return.
Yeah, and I would say on that note, since we're not a mutual fund or an ETF, the distributions you're getting are a combination of profits from dividends, asset sales, and then combined with operating costs. So effectively, whatever that leftover period is on a quarterly basis, we try to pay that out. We also try to do a little bit of forecasting where we might give dividends on a quarterly basis that might be a little less than our target number because we just want to make sure we have enough cash to cover bills or what have you. And so as the year goes on, we do a little bit of catch-up payments and we try to balance it out.
Mm-hmm.
But it is not fixed income. We're not giving you 5%, every year. It could be 8%, it could be 4%, but we aim for consistent payouts. And Amar Rahman, who's one of our co-founders from Innate Capital, he's of the opinion, and I agree with him, that distributions, regardless of the size, are great for people because maybe you get that capital and use it to take your son to lunch or something like that. It might be a small amount, but it might be that meaningful thing that you get out of PRA going on that you can do a good deed with. So, and so we're always open for our members to ask questions and suggest different ways we can do payouts monthly, quarterly, or what have you.
Mm-hmm. And I'd like to add too, Tom, great point. And to that, it's also diversifying not just your investments, but your income stream that you receive. All of us are W-2, we're employed or we own our own business and whatnot. And so receiving income from passive investments, recurring income too, is another alternative way to diversify your income as well. And the next is from Anonymous. What fees do we charge members? This is a partnership. So really there's no fee. So do you want to talk a little bit about this, Tom? I know that there's no fee to join or whatnot. So you just join, your fee is basically a portion of any operating expenses for the co-op, and can let you.
Yeah, correct. On capital that comes in, we don't take a fee on that. There's no dilution. So if you put in $100, you get $100 worth of equity. It's not, a 5% hold or something like this. On the whole, though, we try to deploy 90 to 95% of capital that comes in into investments. So rather than having cash on the balance sheet, we want to ensure that your $100 that comes in gets allocated to produce a profit or an income on that. Because if we hold too much cash or Madarba deposits, that have a lower yield, it doesn't do the benefit. So we try to get it out. We're really more of a cash in, cash out kind of play. We've never done a capital call to our members to make one big lump sum investment. That could happen in the future if we find something really unique to do. But as is, we're very much dollars in, dollars out to try to get, income flowing as soon as possible, income and growth as soon as possible.
Cool. And some of these questions we've already answered, but just in case you're waiting for it to be, we'll readdress them quickly again. But from Abdullah asks, do we have a Sharia compliance board? And that's our investments are vetted, and we talked about that. So I hope that answered your question there.
Just want to jump in, sorry, Iman, just to say that this will be recorded and shared afterwards. So any of the questions that have already been answered, we can just skip over them.
Wonderful. Perfect. Great. So what's the benefit of investing PRA versus an Islamic mutual fund like Amana Mutual Fund? And that's definitely in Tom's wheelhouse. So over to you, Tom, to go through that.
Yeah, I would say it's the diversification angle, the access to multiple asset classes in one. Amana funds are great. I've known those guys for over 10 years, but it is a very specific strategy. Amana Mutual Fund would be great in your 401k. You most likely have access to it. In there, you can get growth, income, global diversification, active management. And so I would just say the differences between you would think of PRA more like your diversified account you might have with an RAA in the future if you get to a certain level of wealth that you can afford that.
Mhm.
Yeah.
Cool. Thanks. And then somebody asked, can TribeVest be used as an alternative to Charles Schwab and Fidelity? It is not a brokerage. TribeVest is not a brokerage account. It's simply a platform that helps crowdfunding for co-ops. Simply put. I mean, so it's what we need to manage the co-op contributions and capital allocations. Beyond Sharia compliance, are there other considerations in investments, such as avoiding investment that profit from war or human rights abuse? So over to you, Tom. I know there are Sharia compliant, but then there's also ethics, and we get that question a lot. Is
Very true.
kind of considering both. So
yeah, we definitely take that screen into account in Zoya. We always tick that box to make sure we get those controversy notices and avoid them when we're looking for new opportunities. We have exited out of companies involved in oil across a number. We've actually done it, and I will say we exited from a few that led to a loss, but we did it because we felt it was the right thing to do. But going forward, yeah, this is one reason why capital going to private allocations, private companies, we would definitely never touch that. So, we do hold, one energy company that's in oil and gas in Canada. But we've made some investments in alternatives, solar energy in there. So I would like to exit out of some of these positions. They don't tick any, huge controversy screens, war, prisons, that sort of thing. But I think it's definitely on our radar.
awesome. So is this available in the US, outside of the US, Canada specifically? So PRA is in the US, but as Tom had mentioned, we invest in, we look into investments outside of the US as well, that align with the strategy of PRA.
Yeah.
How can I invest through a rollover ARA? Great question. There's actually an app. There's a platform that allows you to do self-directed. So you want to look for self-directed. Setting up a self-directed IRA or self-directed 401k. And once you get that set up, then that's what you can use as the managing member of the PRA.
Ivan, I just wanted to circle back on the previous question. It was more so tailored towards, can people in Canada join PRA? So if you want to talk about that sort of more broadly in terms of people outside the US being able to engage with PRA.
Tom, do you want to answer that?
Yeah, that's a great question. US LLCs and US partnerships can definitely welcome offshore investors. And we would hope to do that someday on a individual investors. But since we do use the TribeVest platform, they don't have a KY screening mechanism for non-US persons to join. But however, if you have a US LLC or US entity, you can join through that. And so it does take a little more work, but there are platforms out there where you can set up an LLC and a bank account within the same day, get your tax ID, get everything, and then you would join PRA as that entity, not yourself. You would be the manager to do voting, but could be actually a very interesting way for groups of individuals or families in a foreign country to come together in a shared entity in the US. But by and large, foreign individual investors, I think for us, just where we're at in terms of an operational and tax planning and tax document perspective, if we did have individuals from abroad, it would kind of change the way we'd have to do it and reporting as well, I believe.
Yeah, so there's a lot of compliance things to consider. And with compliance, of course, comes experts that we have to loop in and fees. And at the level we're at right now, it'll probably exceed the fees of where we're trying to keep PRA for a sustainable and successful investment, inshallah.
Yeah. Yeah,
So,
Iman, I do see one other question kind of related to the foreign aspect. So
please
it's
go ahead. Yeah.
and it says, does the foreign investment inside or outside is it inside a passive foreign investment company in the US?
I'm so,
It's the foreign investment
and who,
PFIC.
oh, yeah, PFIC. So where's that question?
It's in the chat. Yeah. It was
So,
at 9:37.
oh, it's in the chat, not in the Q&A. Okay.
I believe it's asking like if we have any special treatment or special.
For the foreign investments, all foreign investments are subject to PFIC rules and reporting. And so it really just depends on the type of asset. Is it passive income or whatnot? And then you'll have to, you can ask. We do work directly with an international tax advisor on our team at TACS. So if that comes into play, then we will, it is definitely a consideration that you have to consider when we reach that point. So
Great. Well, this has been wonderful. Thank you so much, everyone. Saad, is there any final points or questions or comments?
actually there are more questions. So are we
Oh.
on time to go through some additional
I'm
questions?
sorry, I don't see.
Saad, what do you think?
Yeah, I think we can go on for another 5 minutes.
Okay, so let's
Okay, I see the Q&A.
oh, okay. So I'm gonna somebody Hudri asked, do you have to be an accredited investor? And I think back to Tom's point about what sets PRA apart is that we technically act as the accredited investor to have access to funds that otherwise will be reserved for accredited investors and institutions. So you don't have to be to join PRA. And then you can, through PRA, access the ones that you do want to join if you are not an accredited investor. And as a partner, you have voting rights and you can set proposals and whatnot. So that's done. Do you work as a co-op? Yes, we do. We are structured as a partnership. And how can you become a member? You scan that QR code and send in your information, and Tom will send you a link to join, inshallah. And does investment with you mean that the person? Yes, it does. You become a member, we are a hybrid musharaka mudaraba. We are a hybrid partnership model in Islamic finance. And so what that means is that you have an option to be as involved as you'd like, or you can be a passive investor as well.
Mhm.
So that was an anonymous question. And so Interactive Brokers now partners with SNB and Saudi to provide access to Saudi stocks. What is the consideration when thinking of Nama Wealth? You want to take that, Tom?
Yeah. In terms of the Saudi allocation, Saudi fund, so I had worked through all the means and methods to try to do that. And what I found was it was quite difficult. So the original model was we would have to set up a separate entity, possibly in the UAE, and then that UAE entity opens a brokerage account in the Emirates to then buy Saudi stocks. And so that was a very cost prohibitive model, high minimum investment to make it happen. And we just felt it was not right to do as a standalone strategy or through PRA. So Nama Wealth, we've known that team for quite a while. And we've thrown back ideas back and forth about possible collaboration. And since they are tied in with institutional brokerage level access, they have the method to do that for us. So effectively, they would be our partner to help set up that whole program inside the U.S. And also, if we had a UAE or GCC domicile brokerage account, then there would be different tax treatments, FBAR reporting, for instance, A lot more disclosures we'd have to do, a lot more tax reporting. But if we do that through NAMA, it would effectively through a U.S. entity rather than an offshore. So it frees up a lot of regulatory constraints for us, and likely lets us deploy capital in the kingdom at a lower base than some of the offshore brokers wanted.
Wonderful. Thanks, Tom. We have a question here that what is your past performance? 5% profit seems low compared to the current inflation rate. This, the 5% was the dividend distribution rate that we call it dividend distribution, but in terms, it's the profit that the PRA receives as dividends or as profit sharing. There's still the appreciation of assets. So and one of the slides was the IRR is around 13%. So it's not the return on your investment. Your return on investment is much higher. The 5% is what you can expect as a fixed income alternative. Anything else you'd like to add to that, Tom?
Yeah, I would just say that's not fixed. That's just kind of the average we've paid out over time. I think in the first year we were well above 5%. Last year we had a few more costs that came in that lowered that. But I said we also have a voting system where if we have assets that appreciated quite a bit year end, members could vote, hey, let's trim that down, take the profits from that for a year end bonus payment. So I would hate people to get stuck on 5%. We do see that inflation is well above 5%. And this is another reason why we're kind of looking towards more growth assets, because let's be real, on most real estate investments or stock investments or Sukuk investments, you're not going to get over 5%, and if you do find a stock that pumps out over 5% dividend, it might be a short-term thing, that might go away. So this is why we're kind of taking this more growth approach on half of our assets. So need be, there is a way to exit to give members more income is needed as profit distributions, not dividends per se. Just going through the chat.
I think we have time for maybe one or two more questions, and I was going to suggest if we can maybe take some questions with higher upvotes. So if you look in the Q&A box, there's actually a drop down on the top right that says most recent. If you click on that and change to most upvotes, you'll see.
Got it.
Yeah, maybe we can pick one or two of those.
Are you also working on or have income-related investments such as quarterly or monthly distributions for people that want to investments with regular distributions? So that's the recurring distributions that we talked about. Is there a minimum or maximum to invest? Great question. And I believe that's one of the beauty, what sets PRA apart is that although we have it's a proposed requirement of $3,000 a year, and it could be one lump sum or it could be spread out. We really want to make this co-op accessible to all members of our community. We have some college students too that are starting to think about Islamic finance, and it's more about building that community and that awareness and shared co-op. And some of them are investing $100 here and there. I mean, the average investment is $3,000 a year for each person. So this is a diversified investment, but it should be part of your overall investment strategy, not your only investment strategy. And we want to make it accessible to all of our community members. And we do quarterly calls. So where most quarters we do calls where we get together and you get to meet other people with like-minded values and investment strategies and start meeting professionals. And it's also a networking opportunity as well to build that community.
Yeah, I would say our younger crowd, the recent college graduates, they're all friends. They all went to college together and one joined and then they, voiced it to each other. And these friends, they live in different states now. But it was one to the other to the other. So we're really pleased, Vaslang. So we do have a question about Bitcoin. Yes, Bitcoin is a volatile asset, but if you look over the last 5 years, the annual growth rate is around 60%. So yes, there will be up and down years. We buy it directly. We don't do any ETFs or pass-through strategies. And our goal is to hold that as long as need be. And by far, even at the current rate of, 30% of our capital contributions, it's our best performing asset. So it's also a great hedge because, like we talked about earlier, we had threats of tariffs and war, and, the stock market will tell you that. We've had great performers, and then once bad news comes across, they went negative. And so if you have one asset that grows and the other, one drops and one grows, it kind of evens us out.
Great. Thanks, Tom. Well, that was a great recap of like the risk and liquidity management tools that we use within the PRA asset structure. One quick question for you, Saad. Would we have access to these questions so that, if we're not going to be able to get to all of them, but to be able to reply back to the attendees?
Yes.
Wonderful.
Yeah. One final question I see here, which is a great one. It's around direct investment, or you tend to prefer with managers. I would say direct investments we would do if it is, a stock, a liquid asset. But I would say if it's a private investment, we'd like to go with a manager because that manager is going to have a Sharia board. And the big Sharia risk out there when you invest in private assets is just like a stock, right? Just because that startup is Sharia compliant on day one, it doesn't mean it might stay that way forever. So you need to have, a vetted quality private equity or venture capital manager that follows a Sharia mandate that can deal with those risks, or even the ability to exit from a position if it doesn't. And I think on our own, if we were to start making investments in small businesses, we know we wouldn't have the kind of muscle to force them or to work with them to try to make their businesses compliant if they fell out. So that's really more of why we see ourselves more of a passive allocator, especially on long-term assets.
All right. Thanks again, Tom and Iman, for the insights, and to all of you for attending. If you have any suggestions or feedback on today's webinar, please feel free to reach out to us directly. We'll also be sending a follow-up email with the recording of today's session. Take care, and we'll see you at the next one.
Thank you. Assalamu alaikum, everyone. Thanks again, Saad.
Assalamu alaikum, shukran.